The purpose of this video is to answer a question I've been getting from quite a few people, which is it better to take a partial claim or a loan modification? If you are a subscriber to my page, good to see you, welcome back. If not, make sure you subscribe, like my videos, and let me know if you have a comment or question. I can then try to make a video to answer yours, and that will help, millions of people out there. So what's important to understand is this type of question applies right now mostly to people who are transitioning off of a COVID forbearance plan. So if you are one of these homeowners who had a financial hardship based on COVID, you went on a COVID forbearance plan with your lender, and now you're transitioning off of it, you're likely hearing the words partial claim and loan modification thrown around. A partial claim is similar to a deferment. The only difference is who your investor is. So if you have an FHA loan, you will be hearing the phrase partial claim. If you have a Fannie Mae or a Freddie Mac loan, you will be hearing the phrase deferment, but it's kind of the same thing. A partial claim and a deferment means that the bank will take the amount of mortgage payments that you missed during your forbearance period. They will put it on the end of the loan. They will make it become due at the maturity date of your existing mortgage, and then you will resume with the exact same payments under the exact same mortgage that you originally took out. That's kind of what a partial claim, a standalone partial claim is, and a deferral or deferment option. The loan modification option is another type of COVID transition option. It sounds similar, right? In that the payments that you missed during the forbearance period are in some way added to a new principal balance, and then you kind of resume making regular payments. Loan modifications right now are being looked at as ways to kind of see if you can afford a lower payment. So loan modifications are being used by people whose income has recovered, but it hasn't recovered so much that making the original payment they were making before COVID is a good option for them. So some people who are just like good to go, income recovered, they choose the partial claim option. The partial claim gets recorded. You make your partial claim payments at the maturity date of your loan, and you make your exact same payment. If you want to see if there's an option for you to receive a little bit of a lower monthly mortgage payment, like if you are open to the idea of a little bit lower with a little bit lower interest rate, a loan modification might be a good option for you. So there isn't really a great answer as to which one is better, partial claim or loan modification. It just depends on what's going on with your financial situation. Some people like the partial claim deferment option because they don't want to go through the loan modification process. Loan modifications often have a 3-month trial payment plan attached, where if you get approved for a loan modification, you make trial payments for 3 months, and then at the end of that trial period, the bank will then finalize your loan modification. Partial claims happen with just one set of documents. So they will approve you, you will sign and notarize documents, and then you'll just resume your payments. So some people think that that's a benefit, but really it just comes down to whether you want to resume your original payment or whether you really do need a payment reduction or a potential reduction in interest rate in order to stay current on your mortgage. And so as you're going through the verbal questions the banks will ask you, they will ask you a partial claim or a deferment question. And that question will sound like this. Has your income recovered in exactly the same manner it was before COVID to the point where you can make your regular mortgage payment? If you say yes to that, they're going to slot you down the partial claim track. If you say no, I'm able to make a mortgage payment, but not at the exact same amount, they will then slot you down the loan modification path. And so it's not really an easily answered question as to which one is better. The question really is which one is better for you and for your finances. So if this is something you're considering, I would recommend finding an attorney in your state and having a consultation about your finances and what would be best for you. Good luck.